Alright boys, welcome back to this video. Today I'm going to be going over my discretionary model, what I look for every day coming into the market basically. This is obviously still the AX model, but I'm just gonna explain it more in depth, if you know what I mean. With bias, confirmation, when do I want to enter, and stuff like that. So let's just get straight into it, I guess. Bang, 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 bang. Okay, so the first point of the model is that we obviously gotta have a bias. Wait, is my mic on? Yeah, my mic is on. Okay, we obviously need a bias, and I do that by doing a top-down analysis of the market, just starting on the daily and 1 hour, 1 hour and then 4 hour. Step number 2, we need to find our higher time frame drawn liquidity. This will not necessarily be our target because the higher time frame drawn liquidity tells us where price would most likely draw towards, but we don't want to target a 100 risk to reward, if you know what I mean. You can leave a runner for it sometimes, and I do that myself, but I mean, in this case, yeah, I'll explain what I exactly do. 3, we need to find our confirmation that our bias is right, and sort of where we are delivering out from. And step number 4, of course, our lower time frame drawn liquidity and our entry that takes place on the 1 to 5 minute. And when I say 1 to 5 minute, I don't mean 1 or 5 minute, I mean 1 to 5, you know. It can be an entry on the 1 minute, 2, 3, 4, 5 minute time frame. Also actually the 30 second, but I don't do that much. But let's just dig into step 1 here real quick first. So, bias. I told you I do a top-down analysis of the market, and I do that by reading candle logic and order flow in general. So let's say here that this is our 4-hour chart. I want to look for the most recent fair value gaps that we are either disrespecting or respecting. Okay, so in this case right here, let's say we have a 4-hour fair value gap right here, or 1 hour, it doesn't really matter, but we disrespected. Let's say we disrespected it. Bang. I'm sorry. Up here. Let's say we disrespected a gap up here. Okay. We disrespected a 1 hour bearish fair value gap up here. Now we're just getting a retrace because that's what we need. And let's say we have a, and let's say we have a 4-hour fair value gap right here. Okay. So what does this tell me? We are disrespecting bearish fair value gaps, and we are probably going to respect bullish fair value gaps. So in this case, I would only be looking for longs, obviously. So yeah, I mean there's not much more to it other than the drawn liquidity, but I'll come into that next step. But this is the basic of my bias finding. And we also want to look at order flow, we are clearly in an uptrend, making high highs, low lows, high highs, higher lows, blah 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 blah, all that. You can also read that. Anyways, next step. Number 2. This aligns pretty much with bias, but we need to find a higher time frame drawn liquidity. Why is that? Because we need to figure out where the market want to move towards. Let's say it can be in higher draws on liquidity. It can be unmitigated gaps. It can be equal highs. It can be new weekly opening gap. It can be session highs. They are not higher time frame, but in this case right here we have equal highs. So with that in mind, we have a bullish bias. We are trading within this 4-hour gap right here, and we have a clear drawn liquidity which is equal highs. That's just great, isn't it? I guess we can just move on to the next one. Next one, the confirmation. Okay, these look pretty similar, I'm not gonna lie. Okay, anyways, let's say, okay, we need to get our, I usually want to get my confirmations on the 5 to 15 minute time frame. Oh, let me just make this slash real quick. But confirmation is like needed. I mean, you need to have a lower time frame, in this case 5 or 15 minute time frame, to like determine your bias is correct. And if we are respecting 15, let's say this is a 15-minute gap I drew right here, and we bounce off it, then that's enough confirmation for me. And in this case, we also swept this swing low right here and tapped into a 15-minute gap or 5-minute or whatever it is, and we probably swept out some more liquidity down here. So with that in mind, we are delivering from this 4-hour fair gap right here, determining our bias via that. We got a great higher time frames around liquidity. We are inside a 15-minute gap. We swept out a swing low, which is our sell side liquidity. Now I want to go on the lower time frame and see how it's looking. So number 4, lower time frame, drawn liquidity. We are inside a 15-minute fair value gap. This is where I want to find my entry, and I'm looking for the highest presented fair value gap, time frame fair value gap to inverse. So let's just say in this case it's 1 minute. We inverse this 1 minute. We are swept sell side, tapped into a 15-minute, delivering off a 4-hour fair value gap, and entry is when the body closes above this fair value gap. So, and the lower time frame drawn liquidity here could be like a high inside a fair value gap. You could either just target this. I mean, I would probably just target this, and then maybe leave a runner for the equal highs, which is our higher time frame drawn liquidity. But yeah, well, with that being said, you also want to see some structure before like just entering too like quickly and get stopped out. Structure could look like this. We are accumulating maybe a little bit inside this fair value gap right here, and then we get like a manipulation leg down, and then we could get our iFVG right here. Bang, and you could take your entry of that. It really depends. I mean, it's kind of a gamble to just take the first lowest time frame fair value gap. Sometimes it's good to build structure depending on how confident you are in the trade you are about to take. Structure could also look like this. Let's say we tap into a like 2 5-minute fair value gap or something right here, and we get a manipulation leg down, sweeping this low right here, and then getting our inversion right here. There we go. Bang. And you take your trade right here, targeting hindsight fair value gap, equalize. And then in this case, you could probably just go back even at this high right here, because it's a high inside the fair value gap. We don't know how it will react off of it, but I mean, yeah, this is like the fundamental behind my directionary model. And let me just show you in the charts real quick. So let's say coming into today, let's just take the trade from today. 4 hour, what do I notice here on the 4 hour? I'm sorry, let's start on the daily. What can we see on the daily time frame right here? Well, we swept this buy side liquidity right here. Do you have any gaps we're delivering from? Nope, not on the daily. Let's look at the 4-hour chart. How's this looking? Are we disrespecting gaps? We are clearly disrespecting gaps, but we have to look at the like candles closest to the current range. Other than if we have like something over here. In this case, we're delivering out of this 4-hour fair value gap right here. So that tells me bullish. And now we need to find our higher time frame drawn liquidity, which in this case is this new weak opening gap right here. So with that in mind, let's look at the 1 hour chart real quick. Let me just go to like right here. Okay, so with that in mind, let's go to the 1 hour chart. Let's see what's happening. Okay, we get a nice, respect this quite nice. What do we also notice? We are now disrespecting bearish fairly gaps, which tells me that we will probably most likely go higher. Now we need to find out confirmation. 50-minute. Let's go on this. What do you notice here? You may have noticed that we have this 50-minute gap. So in this case, I would like to see us tap into this and move higher from this. If not, then my bias would probably be wrong, and I would probably be looking for shorts if we invest this 50-minute gap. Okay, but let's see what happens. Let's go on the lower time frame now, because that's where we're moving from. Notice this, we also have this nice, nice wick here that we can sweep. So let's see what happens. Here we sweep this high. I'm sorry, low. I don't know what I'm talking about. And what happens? Ding, 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 ding. We don't have any inversion, so we can't really take a trade yet. And what I'm talking about structure is this right here. Look at this structure we're building right here. And here we go. Look at this. We get this manipulation leg below this intermediate high, low right here. I don't know why I keep saying high. That's some bullshit. But we get this manipulation leg below. What happens then? We inverse this fairly gap right here. And this was my entry. Stop loss below here. In this case, I scaled most here just to 1-to-1, because this is our swing high. And do we have any other draws on liquidity? We do. We have an unmitigated gap over here. It's mitigated on the 1 hour, but it's not mitigated. Yeah, it's unmitigated on the 1 minute. I mean, when it was live. So I take my entry here. I go break even at the first internal high, which is this one. And bang. So that's pretty much my model. My discretionary model. Pretty good. I'll see if I can find another example of this, maybe on Forex Replay or some. I'm sorry, FX Replay or something. I'll catch you in there. So here we are in December last month. I don't really remember this price action, so yeah, let's just try to do a top-down analysis first. Remember, we need to find bias first. So the daily is looking kinda bullish, but again, we could also be delivering from. In these cases right here, you would probably want to drop down on the lower time frame to find the true bias. So 4 also pretty showy. How about the one? Yeah, the 1 hour looks pretty good. Here we can clearly see that we are delivering from this fairly gap right here. Yeah, I mean, this is pretty. I mean, I don't really like how the higher time frames are looking. What about the 50-minute? Yeah, I mean, we are delivering from the 1 hour, so I would probably be looking for shorts. Let's see market open. Oh yeah, wait, let's find our draws on liquidity first. I forgot that. So higher time frame draws on liquidity could be something like previous day low, as we have right here. And do I have anything else? Not really. Anyways, let's see how this goes. Alright, we're delivering out of this fairly good right here. Now we have our confirmation on the 5 minute right now. Whoops, what the fuck? Swip this high right here. This is a money high. Okay, we are delivering lower from it, getting a retracement back to the 5 minute. Now let's drop down to the 1 minute. What do we notice here? We inverse this fairly gap right here. And this would look like a pretty good entry. This is actually much better because we also made this order block right here. So, alright, let's just play it. Let's see. Okay, so our like narrative behind this trade is that we are bearish because we are respecting this 1 hour gap right here. We swept this high right here, and our higher time frame drawn liquidity is previously low. What could our lower time frame drawn liquidity be right here? Do we have any unmitigated gap maybe? No, not really. We do, however, just have this. This is our low of day. Whoops. We also have an unmitigated gap down here, a 5 minute. So that is also a pretty good drawn liquidity. But in this case, let's go for the low of day as our lower time frame, and we can just leave a runner, but I would never leave a runner this low, but we can see if it works. I guess let's just put it here, and let's try this and see if it works. If it doesn't work, it's actually pretty embarrassing, but so that you would probably be all out here, but let's just see if our drawn liquidity is correct. Could also just bounce from this 5 minute. Let's just go break even. Yeah, and bang. Bang, 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 bang. So now I also like got a live play, or not live play, I'm sorry, but a backtest play, I guess you can call it. But I hope that maybe was a little more helpful. So yeah, this will be it for this video. I'm glad you watched to the end. I love you.